Hello, everyone. Thanks for joining and welcome back to Wall Street Bullion. Our guest today is David Busch. David is a chartered financial analyst who is a seasoned investment leader with a passion for translating complex market dynamics into actionable strategies. As a co-chief investment officer at Trajan Wealth, welcome, David.
Thank you. I appreciate being here.
Yeah, I appreciate having you on. We want to talk about a lot of things today, interest rates, debt levels, the bond market, silver and gold, everything that's happening in the markets right now. First, though, let's start off with, what's worrying you right now in the financial market or in the markets in general?
Well, I would say that what I'm watching for is what's going to happen at the next Federal Open Market Committee meeting, which is on September 17th. The question remains, will we get a rate cut? Which right now the market's pricing in about a 90% probability that we'll at least get 25 basis points. So there could be a surprise, with a larger rate cut, but also potentially holding steady. And the issue is we've seen some persistent inflationary pressures that have come through the data recently.
Yeah, like a lot of people have been talking about, interest rates creeping up, and they've been worrying in the past 4 or 5 months, or even a little bit longer. So how can the Fed lower interest rates? Is he being pressured into doing this? What are your thoughts on Powell? Should he even be lowering interest rates?
Yeah, I mean, he's definitely walking a tightrope. So on one hand, we have persistent inflation. We saw it in the CPI numbers as well as PPI numbers. So both of those numbers, core, came in higher than expected. And, it's likely due to some of the tariffs kind of coming through the data. And with PPI specifically, there's typically like a 1 to 3 month lag from the time that we observe, the inflation in PPI before it's translated into consumer prices. So that's on one hand. On the other hand, because the Fed has a dual mandate of stability of prices as well as maximum employment, we started to see some cracks forming in the labor market. And what I mean by that is, initial and continuing jobless claims have started to increase, as well as, non-farm payrolls have come down. And so I think they're walking a tightrope. But there are a lot of variables that the Fed has to watch. Not being too terribly political here, the tariffs will have an impact, at least initially, on inflation. Tariffs are inflationary to begin with, but then over time, consumer demand wanes, and so they become somewhat deflationary. We also have, the slowdown of immigration and deportations, which, again, I don't want to speak politically, but the impact on the economy is that, there's a lower labor cost is, being pushed back, into their home country. So I think that's what Powell is focused on is,
Right.
how long is this inflation going to be here, and then what's the impact long term?
Hello, my silver and gold bugs. I just wanted to say thank you so much for watching the video. Hit the subscribe button, hit the like button, and also hit the notification bell so you don't miss any future uploads. Back to the video. What about the debt servicing on the overall debt in the United States? A lot of people talking about they're around that $1 trillion levels just to service the debt on the $37 trillion in America. How unsustainable is this? Where does this lead?
Yeah, right now it doesn't seem to be impacting the markets too terribly much, other than to your point, as we have treasury bonds that are maturing and we reissue them because our national debt is growing. And to your point, we have like $37 trillion in outstanding debt. So those maturing treasuries will have to be refinanced, so to speak, by the US government at higher
Right.
levels.
Yeah, no, it's really concerning. Like, is that not concerning?
It is. And the two mechanisms there, one is the demand side, which, can come from, investors, foreign countries, the Fed itself, although they're not buying today. But the supply side is really driven by the US Treasury. And right now, we're issuing Treasury. There's, some fiscal expansion. And so there's going to be a point where, it becomes, I don't want to say unsustainable, but it's going to be, it's going to erase some potential red flags.
Now we're a huge silver and gold community here on this channel, and there's a bunch of investors as well in this in our community. What are your thoughts on silver and gold? Are they beneficial? Do you think they're not? Do you are you holding any silver and gold assets? What are your thoughts on precious metals?
Yeah, I mean, traditionally, silver and gold has been a store of value. So, and historically, it's been a hedge against inflation. And right now, that's what we've seen come through the numbers. You know, the price of gold has definitely gone up. What's interesting is, and I was talking to a colleague of mine, and he mentioned that as the Fed lowers rates, sometimes that drives the price of gold higher.
Right,
And I corrected him. I said, that's true, but the reason the Fed is lowering rates is because typically, there's some cracks forming in the economy. And so some investors may shift to like a larger allocation towards gold and silver and other precious metals as a safety outlet, right? As a store of value.
right. Now, what else do you have your eye on? Like we talked about interest rates, we talked about debt levels, so a little bit of the bond market. What do you have your eye on right now that that you're being wary of?
Well, I would say like for me, what my thoughts are in terms of the bond market allocation is I'm at the intermediate part of the curve. So I think most investors can do well because rates are higher than they've been over the last 15 years. So there really is a once in a generation opportunity to buy bonds because it can help offset some volatility in the equity markets, where we have higher yields, but to manage against future potential inflation spikes, an allocation towards tips or treasury inflation protected securities can help balance out that risk. In the equity markets, you know, uh, typically speaking, and this is kind of a broad brush statement, but growth typically, large cap growth will typically do well as rates fall. Meanwhile, value will typically outperform growth when rates are rising. So, given where we're at and sort of the uncertainty, I think a balance between value and growth is warranted because we don't know which way the inflationary pressures are going to go totally at this point.
Absolutely. Now, for all the audience that don't know you, what made you start in this industry that you're in right now? Just to give a little bit of background about yourself, when did it all start?
Yeah, so I started my career in January of 2000. So I've been in this industry for just over 25 years. And so
Wow.
I started at the dot-com bust, so and lived through the lost decade of 2000 to 2010.
Wow.
But what drove me is I took a macroeconomics class and I learned, for the first time, this was in college, about the time value of money and compounding interest. And I was like, I've got to get into this. It sort of just gripped me. And I was like, this is the industry I want to be in.
Wow.
And so I've spent my time as on the retail side and then on the institutional side. And my background is primarily fixed income and interest rate derivatives and all around fixed income. But it's a phenomenal industry to be in, and the math works. That's what's so great about it.
What uh, what is your biggest, I guess, advice or your guidance for us from your failures from 2000 to 2025? Been through the dot-com bubble, you've been through the financial collapse in 08, 09. What would be, I guess, your advice or guidance to us or to the younger crowd?
Yeah, I think there's a tendency when the equity market sells off and we go into correction territory, a lot of investors just sell at the bottom and move to cash. And what we've seen is the length and magnitude of bull markets is significantly higher and greater than bear markets. And that's because usually there's some sort of intervention, fiscal policy
Yeah.
or monetary policy intervention. So in those moments where the equity markets sell off dramatically, you know, it's it's to avoid that emotional roller coaster and stay invested because typically the rebound, happens very quickly and most investors don't have time to react. A case in point is earlier this year, I believe it was in April, there was a day, the equity markets had been selling off, and there was a day the Dow Jones was up like roughly 3,000 points. And
Right.
that happened in a very short period of time. So if you had moved to the sidelines and then the equity markets rally, substantially, you've sort of missed that growth that your portfolio would have had. So, we're long-term investors. We think long-term, and we try to avoid, some of those emotional mistakes that can happen in
Absolutely.
very volatile markets.
And now a message from our sponsor, Juggernaut Exploration.
One of the more exciting ones, I think, is Juggernaut. I know some people say, well, lightning can't strike twice, and but look, I think one of the things you got to reflect on is that some of the guys who work here at Juggernaut are some of the same geologists that basically found and have now advanced sherbet at Goliath, okay, over the past years. So they have a very different way of thinking about exploration in the Golden Triangle than most other geologists, okay? And they've gone out and they've identified what could be another sherbet type target here. And the size of these veins is absolutely jaw dropping. My hunch is these guys are onto something pretty special.
The link in the description is right below for Juggernaut Exploration. Now back to the
It's
episode. Absolutely. That's beautiful advice. Now, David, before you go, I want everyone to connect with you. I'm going to put your links in the description below. But where can they connect with you and, yeah, reach out to you?
Yeah, I mean, please follow us on, Trajan Wealth across all social media platforms. Everywhere there's a social media outlet, we're there. And visit us at trajanwealth.com.
Yeah, no, a huge, huge pleasure having you come down. This is your first time. Hopefully, it's not your last because as the market develops, I'd really, really love to have you back on so we can talk more about everything that's happening in the financial sector. But yeah, David, such a huge pleasure. Everyone watching this, the links are in the description below for David and Trajan. But yeah, really, really want to see you back on in the future, David.
Thank you. I'd be happy to join.
Awesome. Talk to you soon.
Take care.